on to some action from the Indian Business Leader Awards. The process to pick the best of India Inc. for the 14th edition of awards began yesterday with the jury meeting in Mumbai. Now, the meeting was chaired by veteran banker Uday Kotak. From the best business leader to companies to startups to the best state, the jury deliberated on all the categories and zero in on the winners. Now, the jury also sat down with cnbc TV 18's Shireen Bhan to discuss the battle for growth. There was consensus amongst the corporate leaders that India needs to reimagine the finance sector and unleash a slew of reforms when it comes to the financial space.
I am a believer in what is called equanimity. When things are good, they are normally not as good as people think they are. And when things seem bad, they are not as bad. They are asset liability mismatching. For most of us who live in the financial sector, this is the core to sustainability of the financial sector. Therefore, if you have a structure where in a fund structure, it's like a current account. Any investor can withdraw money overnight. And if the end asset is a 10 or 15-year asset, there's a fundamental asset liability mismatch. Once upon a time, we were only bank-led. We have now become bank and various other segments of the financial sector. And we need to be competitive. Why is it that even today, for venture capital and private equity, we are disproportionately dependent on foreign savings? This is just one example. And there are many other areas where things are falling between the cracks. With reference to housing finance companies, I would urge through mechanisms like NHB to significantly increase the refinance lines, which enables, but I think 6,000 crores was what the increase was. You need a larger increase where quality housing finance companies get larger refinanceability from longer term money rather than short term debt. Much greater integration across regulation and regulators, much greater communication also with a marketplace which is so much in the listed and open space, where even a small transaction in debt of a few hundred crores has disproportionate impact.
Structurally, unless you unlock the three vectors that drive growth, which is land, labor, and financial capital, and land and labor, frankly, is beyond our pay grade here. What we can talk about is capital. I think we're generally a capital-starved economy. I think long-term capital, like what us and our peers represent, I think we'll see through the cycle. It's a good time to be investing when you can find the right opportunities. But no, I don't think it changes the game a little bit. At the end of the day, there is a big opportunity, both consumption and investment in markets like India. But short term, yeah, there will be an impact. I mean, the dollar is much stronger, the volatility is high, and people will question. But I think that really affects FII flows, according to me. It doesn't affect long-term capital flow, which is driven by the macro opportunity. The first and foremost, I agree you need public sector banks, but I don't think they have to be majority owned in such a significant way. Yeah. And what we are lacking today is real equity capital. So whatever price, I think if they drop below 51, it's not the end of the world because they're still public sector. I think the new government will have to think very hard. I have 5 good PSU banks to back, do some consolidation, let the others be regional banks collecting savings like the Germans do, right? They have lots of banks in the rural sector. Let them do a different role. Everyone doesn't have to be a universal lender. Yeah? There are 5 competent banks and drop their shareholding below, go raise money from the public. I mean, that's the way to do it. And if it comes to 47, I don't think SBI is going to lose the character of a government bank.
This fragmentation in terms of how you're going to be dealing with regulation in the debt markets could potentially create an issue. So I think a rethink as India really needs to develop its debt capital markets, deepen them, channelize longer term savings. I think a more holistic approach across all the market participants regulation would be very good. This is a liquidity issue and not an asset quality issue. But given that they are going to be shrinking, the slack has to be taken up by the banking sector, deposit ratios. So their maneuverability in terms of a significant growth, unless the deposit growth picks up significantly, is going to get challenged. That's why I'm such a votary of securitization that both of them referred to. And I think today's securitization is possible through horizontal strips. Okay. So I'm not as pessimistic about the mutual funds. Okay. If we give them the right tools to manage for up to 1 year maturity through these securitization strips.
Okay, let's now shift focus.